Good morning. China has a big problem, which you might describe as a rich person problem. A guy with $1 billion has some big problems. He doesn't want to put his money in one bank, so he's using lots of banks. He's also very reluctant to lend money even to family and friends. In fact, he probably doesn't even know who his real friends even are. He doesn't want to make investments that hurt him or his family, or that can cause him to later go bankrupt and lose everything, or have his money seized by an unfriendly government, or subject to unjust laws that might cause him to forfeit his wealth. A rich man is much more acutely aware of political risk and of economic risk, of banking risk, interest rate risk, compared to any poor person. And that's a guy who went from nothing to having $1 billion. So our analogy here is pretty good. China's official US dollar reserves are $3.256 trillion. China went from nothing to trillions. That's $3.256 trillion. Now these are the reported official reserves from China's central bank, the People's Bank of China. The rest of China's banking system has hundreds of billions more in smaller banks and in their policy banks, which are devoted to development of China's overseas lending and financing activities, like their Belt and Road Initiative. So if we assume that China has a big pile of about 4 trillion US dollars, consider the problems that this poses for them. They're not American citizens, so that is a huge element of risk right there, political risk to those dollars. And for that reason, Chinese treasury officials are highly motivated to not have many of their dollars in a US bank. If they had any illusions about that before, our economic sanctions on Russia blew those up when we froze their reserves. So those dollars are being pulled out of US and European banks and being put into their own banks. Let's say again for first-timers here that China does not seek to make their currency, the renminbi, the world's reserve currency. The US dollar serves in that role now, and China is just fine with that. A US dollar in circulation is a debt, and US dollars in foreign banks are US debts to foreigners. China has no need for, nor the desire to, create trillions and trillions of dollars in Chinese renminbi denominated debt and dump them into world markets. The US is happy to do that for some reason, and China is happy to let us. And this aspect is a major blind spot for our financial experts in the West. Consider these two analyses here, the first by the Foreign Policy Research Institute and this one by MIT Technology Review. They're very strong pieces. They're both well-informed and that walk the readers through the technologies involved in the introduction of digital currencies and what China is doing in this area. These are the key takeaways from the FPRI. China's central bank is moving aggressively into using the digital yuan. That's just what it sounds like. This is digital currency using the renminbi. They're rolling out programs across China for Chinese companies and Chinese citizens to use digital yuan. True. And the adoption has been pretty slow because Chinese already have lots of payment options. That's also true. What does that mean for people outside China? Nothing at all. China's digital yuan has nothing to do with China's plans for digital currencies, which will use the US dollar. Number two, China is a pioneer in developing digital currencies. The United States is not even thinking about it. This is also true. The House of Representatives just passed a bill that would permanently bar the Federal Reserve from issuing digital currencies backed by US dollars. And the Fed chairman has said nobody has plans to do so anyhow. What does that mean for people outside the United States? That the field is open. If Chinese banks can build a digital dollar, they'll have the market to themselves. Number three, China is the world's largest bilateral creditor. True. Leading trading partner to most of the countries in the world. Also true. China could use a digital yuan to challenge the dominance of the US dollars. That's perhaps true, but again, they don't want to. They want to digitize dollars, their US dollars in their banks, and use those dollars to create new economic activity across the world. Number four, The United States is at risk of losing economic leverage and financial power as Beijing continues to dictate the norms and regulations of digital currencies. 100% true. We Americans take a lot of pride and confidence in the fact that the US dollar is the world's reserve currency. But if China and the BRICS countries can build a system that uses our dollars to finance their own trades, all those advantages of having a reserve currency go away. And that is what China's building. So if China wants to build a central bank digital currency without using renminbi, we should not look to China's yuan as a model for what they're going to do. We also cannot look to Bitcoin because Bitcoin is a lousy tool for cross-border trade settlements because of its wild price fluctuations. Probably the best example of what's coming out of China is to look at Tether. Tether is a stablecoin, a digital currency that tracks the US dollar. Its value is determined by the global market value of US dollars. And Tether claims to have actual US dollars in reserves to back all of their stable coins that they have in circulation. As of close of business last night, Tether's USD stable coins in circulation are $116 billion. And they claim again that all those stable coins are backed with actual US dollars or US Treasury bills and notes. Real reserves, in other words. Here then is how Tether makes money on those reserves. They mint stable coins that are pegged 1-to-1 to the US dollar. Tether makes a lot of money on interest income from all those US savings bonds, and that adds up to billions of dollars a year. Tether also makes money whenever it's used as a stable coin. They charge fees in and out of different wallets and out of different currencies. It's not much, just a few pennies on each one, but those add up. Tether burning is destroying coins after use. There's a small fee for that. And they're also paid when companies or banks or merchants want to join the Tether networks. They can also earn interest by lending their reserves, insofar as they manage their risk carefully here, and can generate investment income by taking equity stakes along with their loan activities. So that's a quick summary of what Tether is and how they make money. Let's look at how it's working in the real world and assume that China can read the Wall Street Journal as easily as we can. In their reporting of how Russian companies are using Tether to do billions of dollars in business, Tether has become indispensable, mandatory, in order to get around the sanctions. Importers use Russian rubles, go through intermediaries to convert them to Tether. Tether converts again to foreign currencies. Very simple, very fast, very inexpensive, and completely outside the Western banking systems. Tether is backed by the US dollar, 1-to-1. But unlike dollars inside our banking system, our authorities cannot track Tether. These numbers here are just astounding if they're true. The journal estimates that Tether is doing $120 billion in trading volumes every day. For full year 2023, over $10 trillion. Tether is already almost as big as Visa, the giant debit and credit card issuer that's tied to all the US and European banks. Remember that Tether's reserves are $116 billion. The global demand for US dollar denominated stablecoins is so enormous that Tether is turning over its US dollar reserves every single night. $116 billion in reserves to create $120 billion in trading and settlement liquidity every day. And China's US dollar reserves are 25 times what Tether's got, well over $3 trillion, probably over $4 trillion. So what Tether is doing with their stablecoins is an obvious roadmap for China. And this is no longer hypothetical. China has already announced plans to make Hong Kong a financial capital for digital currencies. And we got another news update just yesterday. In the next 18 months, Hong Kong will build out a new system of digital assets focusing on stablecoins. It's part of Hong Kong's push to become a global hub for financial technology. Just an aside, but Hong Kong doesn't push for anything. This should read that Beijing is going to make Hong Kong the global hub. Hong Kong will strengthen supervision and laws related to digital assets in the next 18 months. They will require that issuers of fiat currency tokens get a license from the central bank. Here's what they're saying in a nuts and bolts way. Hong Kong is going to be the new world capital for stablecoins. The whole world wants US dollars to make these trades go, and nobody has more US dollars sitting around than Chinese banks do. So Chinese banks can work with stablecoin issuers in Hong Kong and issue US dollar-backed stablecoins. Regulators in Hong Kong will be responsible for helping them manage the risk and do all the back office work and building out the plumbing of the system itself. This is how much Tether has grown since it started just 5 years ago. And this is the growth in Tether's market cap in that same time. 5 years ago, Tether didn't exist. Now it's as big as Visa. China looks at this chart and says, next 5 years, that's what we're going to do with our reserves. Back again to point 4. Beijing is going to dictate how digital currencies are used. That's the plan. The only thing these reports have wrong is that they assume that they're going to be using Chinese-yuan. They won't be. It'll be dollars. They're going to take over the financial system of the world using our dollars. This is Hong Kong. Speaking of, be good.
Thank you for your word. Thank you for your son. Thank you for my life. And for using me in a mighty, powerful way. And for using